Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Better than expected updates last week on consumer and wholesale price inflation buoyed investor sentiment, driving stocks higher and lowering bond yields. The Dow Jones Industrials average rose 2.29%, while the Standard & Poor's 500 increased 2.42%. The Nasdaq Composite Index advanced 3.32% for the week, and the MSCI EAFE index, which tracks developed overseas stock markets, gained 4.67%. Back-to-back positive inflation reports emboldened investors, sending stocks to their highest levels since April of 2022. Lower than forecast inflation on both consumer prices and producer prices sparked investor optimism that inflation may be able to fall further without tipping the economy into recession and provide the basis for the Fed to moderate its more hawkish rate hike stance. After 4 straight days of increases, investor attention turned to the kickoff of a new earnings season on Friday. Despite some positive earnings surprises from several big banks and a major healthcare provider, stocks closed out a good week with a very slight decline. So inflation cools. Inflation continued its downward trend last month, falling at its slowest pace in over 2 years. Consumer prices rose 0.2% in June and 3% from a year ago. Both were below economists' consensus forecast. Core inflation, excluding food and energy, of course, which has been more stubborn, fell to 4.8% year over year, its lowest level since October of 2021. The positive disinflationary story continued the following day with a lighter than forecast increase in producer prices. Wholesale prices increased 0.1% in June, which was lower than the consensus forecast of 0.2%. The increase from a year ago was also 0.1%, representing the smallest gain in nearly 3 years. Core producer prices rose 2.6% year over year. All of this continues our theme for 2023, that inflation would fall, the Fed would pause, and that if we had a recession, it would be a very mild one. Which brings me to a question I've been hearing more and more. Wasn't there supposed to be a recession? Well, in advance of 2023, the recession drumbeats were so loud it was deafening. Market pundits warned that as the Fed raised interest rates, it was just a matter of time before the economy entered a recession. But it's July now, and so far, no recession. Now it appears the economy is actually slipping into an expansion rather than moving towards a recession. The first quarter gross domestic product expanded at a 2% rate, and the job market appears in good shape. Meanwhile, the stock market, considered a leading indicator, rallied in the first half, catching some by surprise. Those in the just a matter of time before a recession camp point to the yield curve. It remains inverted, with the interest rate on the 2-year Treasury note higher than on the 10-year Treasury notes. Historically, an inverted yield curve has signaled a recession. This chart shows that the current market rally has lasted roughly 9 months, which is about the length of the market's downtrend last year in 2022. While the Standard & Poor's 500 remains well below the high, the downtrend and the uptrend are starting to look very similar. So what's next for the economy and the stock market? I can't tell you. I don't have that crystal ball. I don't know the future. But I can tell you what's next for us, and that is to remain focused on individual investment strategies for our individual clients, which reflects individual goals, time horizons, and risk tolerance. If we are not investing your life savings for you, I invite you to learn about our personalized approach at smartmixportfolios.com. We keep our finger on the pulse of what's really going on in the markets. This week's economic news that we're watching includes tomorrow's retail sales figures, as well as a report on industrial production. On Wednesday, we have a report on housing starts. And then on Thursday, existing home sales index of leading economic indicators, as well as jobless claims. Like I said, earnings season just kicked off on Friday. We have a lot of companies reporting earnings this week. I won't read them, but a busy week of companies reporting earnings. We'll be keeping our eye on all of it. So again, if we are not investing your life savings for you, you can learn about our personalized approach at www.smartmixportfolios.com. All right, that's it for today. Thank you again for staying until the end. I have another riddle for you. Again, if you are the first person to post the correct answer down below this video in the comments section, we will send you a gift card for coffee on us. All right, so today's riddle is: what is the longest word in English to have only one vowel repeated? So we have a hint for you this week too. So the hint is it has 18 total letters and the vowel repeats 4 times. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you'd like the answer to previous week's riddles, you can visit our website /riddles for those. Lastly, later on today, as always, I will be sending out our full update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. In this week's tax tip, we answer the question, do I need to report cash payments? So if you pay or receive in cash, the question that we're answering is, do you need to report them? So if that sounds like you, pay attention to this week's tax tip. If you're not getting this email and you would like it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.